Well, it could be a big week for financial regulation. Several proposals making their way through Congress. A lot of debate about them all. But how are they going to impact the big banks and, of course, investors' perception of them? That's critical. Paul Miller, senior banking analyst at FBR Capital Markets, joining us now to talk about it. Paul, what do you think? I mean, let's start off first with the Volcker Rule. It's probably among the most contentious aspects of the reform bill that's on the Senate floor right now. Does it make it through? And if so, what does it do to the banks?
You know, right now, nobody has any really good insight of what's going to make it through, what's not going to make it through. We do think the Volcker Rule will kind of be lessened for its impact, and also the extension of the Volcker Rule, when it really comes into play, is a couple years down the road. However, right now, there's a lot of odd things going on in the Senate. Some of these old school guys have been losing their primaries, and so therefore, right now, it's very difficult to handicap what's getting in and what's going to get out of these bills. So the market right now is starting to wake up to the fact that we could wake up and the Volcker Rule, glass-steagall rule could be in place again, which could have a negative impact on these banks' revenue streams down the road. So it's something we're very concerned about, something we weren't so much concerned about a couple of weeks ago.
Right.
But now, every day, the bill moves further to the left, and it seems like it's very difficult to get it to the middle.
In terms of what effect that could have on banks' revenue streams, let's talk about the banks that are most exposed to this and those that aren't. I would assume, looking at a Goldman Sachs, looking at a Morgan Stanley, much greater exposure if we do see, say, a renewed Glass-Steagall take effect than banks that have much more commercial exposure.
Yes, I mean, right now what's going on, the difference between the big commercial banks like B of A, JP Morgan, Goldman Sachs, you're right, Morgan Stanley versus the regionals. Yeah. The regionals don't have prop trading. They don't have a lot of this stuff, so it's not going to impact them at all. It's going to impact these big Wall Street money center firms. And that's where I think the politicians are most concerned about. Those are the ones who are really on the edge, almost all failed. Over a year ago. And so those are the ones that are being pushed, that we have to divide these type of services they provide and maybe bring back the Glass-Steagall, and that's what the Volcker Rule is all about. But yes, it's mainly the big money centers out of New York that it's impacting.
But you know, one thing that could really impact the banks that have more of the commercial exposure in terms of customers' day-to-day interaction, B of A, Citi, for example, is limits on fees. I mean, we saw what credit card reform has done to these banks, having to change their structure. But now we have, a potential consumer financial protection agency. What does that do to limiting overdraft fees, limiting different fees on certain accounts? That could really be a blow to the revenue stream as well.
That's exactly right. I think when we started going down this path a couple of weeks ago, people thought the regionals would be the big winners, as they were going to really stymie the big money centers. But this CFPA and state preemptive rights and attorney generals allowed to sue national banks and trump national bank charters is a very big concern for these regional banks. And you are right. You could wake up and say you can only charge $10 for an overdraft fee and only one time a month.
Right.
That is really going to hamper a lot of these revenue streams. You're exactly right. Deposit fees has been a big earnings generators for these banks, and now that's come under an extreme amount of pressure. And you're exactly right, is that we could wake up, even if a lot of this tough stuff doesn't make it in the bill, you still got this independent CFPA, you still got preemptive state rights, which could really hamper these revenue streams.
Given all that we've discussed, what is your play on banks right now, and is it different depending on the type of bank you're dealing with?
We think most banks are fairly valued right now, given the rallies we've seen over the last couple of months. And I also think that now we have to digest financial reform and whatnot. But I think the big issue is, can the banks earn into their multiples at this point? Can we start getting loan growth sometime at the end of the year or in 2011, that these guys can start having normalized earnings that justify some of these prices? And I think that's still a long way off, and we really don't know. We don't have enough insight yet to figure out if that's going to occur.
Yeah, Paul Miller, great insight. Thanks so much.